Right now, as you're watching this video, your age pension is increasing by $29.70 a fortnight for singles and $44.80 a fortnight for couples
Oh, look
combined.
at
But there's
that.
also a significant change happening
That's a
to
relief,
deeming
isn't it?
rates that could affect your pension payments. If you're receiving the age pension, DSP, carer payment, or any Centrelink benefits, you absolutely must understand what's happening on September 20th, 2025, because these changes are already in effect and will directly impact your fortnightly payments and your financial future. The changes that took effect on September 20th, 2025 represent some of the most significant adjustments to Australia's pension system we've seen in recent years, and understanding exactly what they mean for you could make the difference between receiving your full entitlements or missing out on money that's rightfully yours. Let me break down everything you need to know in simple, clear terms so you can take action if necessary. The maximum full age pension has increased to $178.70 per fortnight for singles, which equals $30,146.20 per year, while couples now receive $888.50 each per fortnight, totaling $23,101 per person annually, or $46,202 combined per year. This represents a substantial boost to your income, and if you're currently receiving the full pension, this increase has already appeared in your Centrelink account automatically without you needing to do anything at all. However, the story doesn't end there, and this is where many retirees are getting caught off guard. The deeming rates, which are the assumed rates of return the government uses to calculate income from your financial investments and savings, have experienced their first increase in over 5 years after being frozen during the COVID-19 pandemic. From September 20th, 2025, the deeming rates increased to 0.75% for the lower rate and 2.75% for the upper rate, representing a significant jump from the previous rates of 0.25% and 2.25% respectively. This change is particularly important because it affects how Centrelink calculates your deemed income from bank accounts, term deposits, shares, managed funds, and other financial assets when determining your pension eligibility and payment amount. For singles, the lower deeming rate of 0.75% applies to the first $64,200 of your financial assets, while the higher rate of 2.75% applies to any amount above that threshold. If you're a couple, the lower rate applies to your combined first $106,200 of financial assets, with the higher rate applying to anything above this amount. To put this into perspective, if you had $100,000 in a bank account earning just 1% interest, under the previous deeming system, Centrelink would have assumed you were earning $2,500 per year from those funds, but now they'll assume you're earning $7,500 per year, which could significantly impact your pension payments under the income test. The practical implications of these deeming rate changes are substantial and far-reaching. Approximately 180,000 full-rate pensioners may become part-rate pensioners due to the increased deemed income from their financial assets, which means their fortnightly payments could be reduced even though they're not actually earning more money from their investments. Conversely, some people who previously didn't qualify for any pension might now be eligible for a part pension due to the overall increase in pension rates, creating a complex situation where winners and losers emerge from the same policy changes. This is particularly concerning for retirees who have been conservative with their investments, keeping money in low-interest savings accounts or term deposits that are earning well below the new deeming rates. If your actual investment returns are lower than the deeming rates, you're being penalized by a system that assumes you're earning more than you actually are, which seems fundamentally unfair but is how the system operates. The government's rationale is that deeming rates should better reflect current market conditions and encourage more productive use of capital. But for many retirees, this creates additional financial pressure and uncertainty. The changes also extend beyond just the age pension to include the disability support pension and carer payment, meaning that people receiving the full single rate of these payments are also seeing the $29.70 boost to their fortnightly payments. Veterans Affairs pensions through the DVA follow similar indexation patterns, so if you're receiving any form of government pension or support payment, it's crucial to check your individual circumstances and understand how these changes specifically affect your situation. For those of you receiving Commonwealth rent assistance, there's additional good news as these payments are also increasing alongside the pension changes, providing much-needed relief for retirees facing rising rental costs across Australia. The Energy Supplement and Pension Supplement, which are additional payments that accompany your main pension, are also subject to these indexation increases, meaning your overall fortnightly payment package has grown substantially. Your Commonwealth Seniors Health Card and Pensioner Concession Card benefits remain unchanged in terms of eligibility criteria, but with the increased pension payments, some people might find they now exceed the income limits for the CSHC, while others might newly qualify for concession cards due to changes in their pension status. The Pharmaceutical Benefits Scheme continues to provide the same valuable prescription medicine discounts, and these concessions become even more valuable as healthcare costs continue to rise. What makes this situation particularly challenging is that while your pension payment might increase, the higher deeming rates could simultaneously reduce your payment if you have significant financial assets, creating a scenario where you might actually receive less money overall despite the announced increases. This is why it's absolutely essential to log into your Centrelink online account through MyGov and review your current payment details, payment schedule, and any letters or notifications that explain how these changes specifically affect your individual circumstances. I encourage you to share your experiences in the comments below about how these changes have affected your pension payments, whether you've seen an increase, a decrease, or if you're now eligible for payments you weren't receiving before. Your stories help other viewers understand the real-world impact of these policy changes and create a supportive community where we can learn from each other's experiences. If you found this information helpful, please give this video a like and subscribe to the channel so you don't miss future updates about pension and superannuation changes that affect Australian retirees. The timing of these changes is particularly significant because they come at a time when many retirees are already struggling with increased cost of living pressures, rising energy bills, higher grocery costs, and expensive housing, whether you're renting or paying off a mortgage. While the pension increases provide some relief, the deeming rate changes represent a more complex challenge that requires careful financial planning and potentially seeking professional advice if you have substantial financial assets that could be affected. Moving forward, it's important to understand that these changes are part of the regular indexation process that occurs 3 times per year, typically in March, July, and September, based on movements in the Consumer Price Index and male total average weekly earnings. However, deeming rate changes are less frequent and more politically sensitive, making this September 2025 adjustment particularly noteworthy after years of frozen rates during the pandemic period. The September 2025 changes to age pension payments and deeming rates represent both opportunities and challenges for Australian retirees, with pension increases of $29.70 for singles and $44.80 for couples providing welcome financial relief, while deeming rate increases to 0.75% and 2.75% could reduce payments for those with significant financial assets. Your immediate next steps should include logging into your Centrelink online account through MyGov to check your updated payment amounts and reviewing any correspondence from Services Australia about how these changes affect your specific situation. If you're unsure about your eligibility for any concessions, including the Commonwealth Seniors Health Card, Pensioner Concession Card, or rent assistance, contact Services Australia on 132300 to discuss your circumstances with a customer service representative. For those with complex financial situations or substantial assets, consider speaking with a licensed financial advisor who understands Centrelink rules and can help you optimize your retirement income strategy. Remember that you don't need to take any action for the basic pension increases as they're applied automatically. But staying informed and proactive about your entitlements ensures you receive everything you're eligible for. Thank you for watching, and I'll see you in the next video where we'll continue helping you navigate your retirement with confidence and clarity.